Hi and welcome to the Money Show. I'm Kavita Thapliyal and the only one-stop shop where we answer all your personal finance queries. This is a show where we not only help you finalize your investment strategy but also help you align all your investment instruments with your financial goals. And we talk about different investment strategies, investment products, and also answer your investment portfolio queries. Just in case you haven't yet sent across any of your questions, you can do that on our WhatsApp number that's flashing on the screen. And also in case you want to send across an email and give us your entire financial detail in terms of investments, your financial goals, and want a checkup from our experts, do that on our email ID also. So WhatsApp number and email ID flashing on the screen. Let's begin the show. And today, first up, we'll start with our viewer queries. And joining me is Shweta Jain, who's our expert today on the show, and she'll be doing your life financial planning. Shweta, hi. Evening. Welcome to the show. And we've got specifically a lot of queries for you. You know, done well and you were missed on the show by our viewers specifically. So I've sent you as many queries as I could find on your name, but we'll try and take whatever we can, okay? So let's begin. And this is a question coming in from Akib Siddiqui. And Akib has given us his fund details. He's got Parag Parikh Flexi Cap, Bandhan Small Cap, Motilal Oswal Mid Cap, Nippon India Multi Cap, Jio BlackRock, SBI Contra. And he's doing 5,000 SIP in each of these funds. And he's accumulated somewhere around 3 lakhs odd, and he started investing in this year, August. 15 years time frame for the investment. The target is 2 CR, and he will be stepping it up also as and when he has a salary hike. So he wants to know if there is any fund mix change that you might want to recommend, and should he be adding one more flexi cap in his portfolio, or do you think it's overlapping and that is not required because he already has one of the leaders in the flexi cap category, which is Parag Parikh. And so he also wants to know that he will be stopping, if at all he extends his exposure in a flexi cap, he'll be stopping the investment in 5 to 7 years because he wants to get married, and then he wants to also figure out his financial goals for his child's future. So he wants a strategy for that as well. And otherwise, he will be able to invest comfortably for 15 years, and he will be taking out money after 20 years, it seems. So, yeah, a well-planned, at least the goal alignment is pretty clear. He knows in his head as to how many years he wants to invest and, you know, how to approach each fund category. So what's your take on the question first, if we can understand that?
Yeah, I think Akib is quite clear with his goals. That itself is the first obstacle for a lot of people. I think that clarity gives him clarity of how to build his portfolio as well. So only the scheme that I didn't understand was the Geo BlackRock. He's just mentioned that. But the other schemes look good. SPI Contra, I would say, is one of the misfits in his portfolio. I would feel something like a DSP Nifty 50 or an Invesco larger mid cap would be a better fit than a flexi cap, to be honest. I think it'll give him a little bit of more control in his portfolio, a little bit more good exposure rather than overlap in the portfolio. He would also need to increase his SIP. I think he's aware of that as well. So he would need to increase his SIP to 50 to at least to 50 to 60K so that he can meet his goals. He can stop the flexi cap, or depending on how things look 5 to 7 years later, he can stop the SIPs then and withdraw from a particular scheme or from the combination from the portfolio as the gains he can withdraw. But that is something that I think this call should be taken at that time and not now. Maybe closer to that time, not exactly at that time, maybe a year or two closer to that.
Okay, very interesting. Also, you know, I'm not sure how has he analyzed this particular requirement or his strategy of stopping his investment, you know, in FlexiCap after 5 to 7 years or maybe 10 years. Do you want to maybe advise him something on this note? Because I don't know if it's very well thought of. And just in case it is not, I mean, let's just help him out with that as well.
So, you know, a lot of investors associate one particular scheme to a particular goal.
Right.
Instead of directing, say, a small portfolio or a combination towards a goal, they associate one scheme to the goal. Also, what they do is when they need particular funds, instead of seeing that, you know, they could withdraw it uniformly from a couple of schemes, see that at that time what scheme is not doing well, or what category is done well, or is heated up, or they should do some bit of profit booking. They don't really look at it that way. So I think this, he should leave it at that point, saying, okay, this is what I will withdraw. This is the amount. He should be clear, but not necessarily the strategy. I think that he should be clear about.
Okay, one more thing. So he says that he'll be investing for 15 years. 5 years of cool off period, that means no investment in 5 years, and after that, when the investment completes 20 years, he'll be taking the amount back. How aligned are you with this strategy? Do you think that 5 years gap is good for him, or maybe what he should do is start transferring the amount in some other safe asset class or conservative asset class, or maybe have a hybrid approach? Nearing the goal strategy and that exit strategy is also important.
Absolutely, absolutely, Kavita. So, what we see is when clients plan or investors plan that much in advance, they are thinking of the time when they need to withdraw more than now what they should be thinking about. So, I would say invest for as long as you can. See, this 15 years, another 10 years later may become 10 more years, So, things keep changing, aspirations change. What looks today like a fantastic amount, say 2 crores at that time, may actually be worth 1 crore or lesser in today's value, right? So they have to understand that, the aspirations might change, the goal itself might change. The only thing in their control is to keep investing. And trust me, when people like him who are planning well in advance, who are looking at stepping it up, will only invest more and more. A cooling off period is absolutely fine. In fact, I would say even when one cannot continue to invest, if you can give it more time, I think that will help them tremendously. Of course, as you mentioned, the exit strategy at that time would need to be saying, we will need to move away from equity at least 2 years before the goal, slowly and steadily, because otherwise it could happen that when the time arrives, markets may be into a correction mode, may not be doing well. So he should look at some of these things. But like I said, he is young. Um, he's still looking at his own marriage, so I think that is something that works in his favor. So I think the time horizon will only increase, and he will not be withdrawing all the funds at that time as well. See, even at retirement, you don't need to withdraw all the funds. You're not going to stuff it under your mattress. You will need cash flow. You will need to allocate to different asset classes even then. So there is scope for equity even then. So there might be
Sure.
funds that he's investing today which will stay invested for say 30-35 years as well.
Absolutely. All right, Akib, just in case you want more clarity, you can send across the question again with whatever new queries you have. But then, Shweta, let's move on. Let's take Mr. Sukumar Adak's question. He is from Defence Forces, 43 years old. His goal is 2 CR after 13 years. Portfolio value is somewhere around 19 lakhs 30,000. He's doing SIP 15,000 every month, Parak Parik Flexi Cap, Kotak Multi Cap. He's got mid cap of Motilal Oswal, small cap of Nippon India, and Canara Bank large and mid cap. Okay, very interesting. Thank you so much, Mr. Sukumar, for sending us your question. And interesting funds you have, in fact, all the category leaders. Any change in the fund mix, Shweta?
No, I think Mr. Sukumar has done fantastic in selecting good schemes, less overlap. I think it's a good portfolio. He's been investing for a while as well. So it's not like he started yesterday. So his portfolio absolutely doesn't need any change. He's got large and mid, he's got mid cap, he's got small cap. If anything, he decides to add on more money, which he should at some point to get to his goal. He will need 35,000 per month. Schemes look good. He could add in a UTI Nifty 50 or a DSP Nifty 50 to add on to the passive category, to add on to lower cost, no maintenance fund. I think he's good.
All right. Let's take Ankit Shah's question. He's from Bombay. He's 34 years old and he's got a couple of funds. He's got HDFC Flexi Cap, 25,000 SIP going on. Edelweiss Mid Cap, 15,000. ICICI Pro India Opportunity, again 15,000 SIP. ICICI Asset Allocator Fund of Fund. Here he's put in a lump sum of 5 lakhs. ABSL Consumption Fund, 25,000, and ABSL Digital Fund, 25,000 again. Total SIP is almost around 1,05,000. He can step it up by 10% is what he's saying. And portfolio invested is almost 32 lakhs and the value is 39 lakhs. So he's in profits out there. The goal is 10 CR in 15 years. So is the allocation and diversification correct? And he wants to add a small cap on which he wants a recommendation, and he also wants to make a portfolio for his parents who retired. So again, I think for that we'll need more clarity, Mr. Ankit. But having said that, if this is the portfolio of your parents who will be retired, we can really help you with the amount of corpus that can be accumulated. But also, what's the purpose of this portfolio post-retirement? That we don't have any clarity on. So let's just focus on the investment strategy and the fund mix, which exactly you've what asked also. Shweta.
So Ankit has an interesting fund mix, I would say. He's not only added lump sum in the asset allocator fund of fund, but he also has thematic funds going on a regular basis. There's consumption fund and there's Digital India. The SIP amount is good, but because his target is higher, he would need to invest at least 2 lakhs per month to get to this. He said he can do a step up, so I think step up is something that he should be starting immediately. In terms of schemes, I would say he needs some bit of changes there. While I understand that thematic funds can be giving you that extra boost in returns, but they are also extremely risky and volatile. So if he's got the patience for it to stay volatile for a bit, I think it's still okay. He would need to time the exit properly as well to make sure that he's taking advantage of this. I would urge him to make sure that there is some bit of passive, some bit of flexi cap in his portfolio. He has HDFC, I see, but I would recommend a PPFAS flexi cap, which also adds a bit of international in his portfolio. Uh, from a strategy point of view, I think a little bit all over the place is what I feel. I don't feel it's a very cohesive portfolio. And I think over time, he should sort of consolidate that. He doesn't have a small cap specific fund as well. So I would look at a Bandhan small cap or a small cap to add it to the mix if he is not willing to add like a PPFA's flexi cap or so. Uh, Nothing wrong with the thematic funds. Like I said, it just is a little more risky for my taste, to be specific.
All right, so that's a recommendation on your fund mix. And with that, that's all the time we have for our viewer queries session. Thank you so much, Shweta, for being on the show and helping our viewers navigate through their investment strategies today. And it's time for a short break on the Money Show. But then post that, let's get connected with Kailash Kulkarni of HSBC Mutual Fund. And let's understand the year that has panned out so far and also what's the outlook for 2026.